Hi, the topic for today is real estate, an investment or an asset by Rasheed Busari. Well, what we want to know is if real estate investment or real estate business is an investment or an asset. This discussion is born out of an argument between two friends whether real estate is an investment or an asset. Actually, I I met some guys arguing on how valuable real estate business is, and this discussion uh, triggered me to do a few slides on the viability of real estate business. And actually, this discussion will be told around working class people so as to awaken their minds in respect of property investment while in active service, and also as a protection or cover for post retirement. And this discussion will be more of scenario based. Actually, in Nigeria, a lot of uh, a lot of people in that are still in active service, some believe that while in active service they should have a house of their own, while some believe that, well, I cannot pass through all the stress of pursuing bricklayer, pursuing carpenter and the likes, the stress of building a house from foundation to the completion stage. So those that fall into that category believe that once they have their fund on ground, they can easily purchase a very nice structure for their self or for their home. Then the we are going to start by defining what real estate is, and this our definition is from Wikipedia, which define real estate as a property consisting of land and the buildings on it, along with its natural resources such as crops, minerals, or water. Then we have four types of real estate. We have the one for residential purpose, commercial purpose, industrial purpose, and one just for land. Then we also look at what is an investment. So to invest means to allocate money in expectation of some benefit in future. It can also be defined as the action or process of investing money for profit. However, in finance, the benefit from an investment is called a return. So what this definition is just trying to explain is that an investment is basically an action taken by an individual with the expectation of benefit, and that benefit is called returns. So any action taken or any money invested in any action, the purpose of investing that fund or money or action taken is to get something back in return. So that's explain what investment is. Then we also look at real estate investing. Well, investing in real estate involves the purchase, ownership, management, rental, or sale of real estate for profit purpose. So we've said earlier on that anything that involves investment is an action taken in expectation of getting something back in return. So we also look at what is an asset? An asset is any resource owned by business, and it can be tangible or intangible. So is an asset is any resource owned by the business, anything tangible or intangible that can be owned or controlled to produce value, and that is held by a company to produce positive economic value, So we can simply say that an asset is any resources used in producing anything that has value. And it is also any resource owned with the hope or with the expectation of converting it into cash in the nearest future. So from the definitions above, we can say that to know whether real estate is an investment or an asset depends on the situation and purpose of building. Like I said earlier on, we all have different reasons for building a particular type of house. Some they build for rental purpose, some they build for family purpose, which we call residential purpose. So, however, we can infer that building house for personal use is an asset, while building house for commercial or rental purpose is an investment. This inference is from the definition of asset and investment we gave earlier on. So we are going to paint a typical scenario which involves four employees named Mr. A, Mr. B, Mr. C, and Mr. D working in the same company, and they are all earning the same monthly salary of 500,000 naira per month. Then all of them they've spent 20 years in service in the same company, and they all have savings of 300,000 naira per month out of their monthly salaries. So upon 10 years in service, Mr. A bought a half plot of land valued at 4 million naira at Arepo, while Mr. B bought a full plot of land at Alakia area of Ibadan valued at 1.5 million. Mr. C bought a half plot of land at Magodo Phase 2 valued at 8 million naira. And Mr. D decides to put his 10-year savings into government treasury bill of 10% for 364 days compounded annually. Mr. D did this because he has no time to build house, and he has decided to buy house in the eyebrow area of Lagos upon retirement. As I said earlier on, we all have different purposes of investing our money, and likewise different purposes of building, of going into real estate. Like I said earlier on, we have four types: commercial, residential, industrial, and land. So as for Mr. D decides not to build house because he cannot all the stress involved in building a house from the scratch. He has no time to pass through all those stress. So he has decided to put his money in a risk-free government treasury bill with a yield of 10% for 1 year compounded annually. So Mr. A built a commercial property of 4 units of two-bedroom with building cost of 15 million naira. The expected yearly rental fee from the 4 units is 2.8 million naira, while Mr. B built a commercial property of 4 units of two-bedroom with building cost of 15 million naira. The expected yearly rental fee from the 4 units is 800,000 naira. Mr. C built a family house, four-bedroom bungalow with building cost of 10 million naira. So let's assume inflation rate is neglected, and also there is no rent increments within the 20 years or within the period. Also, the building constructions were completed by the end of the 10th year. So this is our analysis of the scenario painted. The purpose of the investment purpose of Mr. A is for commercial, while Mr. B commercial, C residential, and D treasury bills. Well, for the first 10 years in service, the savings realized from the savings realized by each of the employee is 36 million naira each, while for Mr. A, cost of land and building is 19 million naira, Mr. B is 16.5 million naira, Mr. C 18 million naira, and Mr. D did not purchase land or build house. He invested the whole 10-year savings into a government treasury bill, which is 36 million naira. However, after the construction, the balance that is left from the savings for Mr. A is 17 million naira, Mr. B 19.5 million naira, Mr. C 18 million naira, while Mr. D has no balance left because he has already invested all his 10-year savings into government treasury bill. So the next one is we are looking at the income realized from the investment. For Mr. A, for the 10 years post building or post construction, Mr. A realized 28 million naira as rental income, while Mr. B realized 8 million naira. Mr. C realized none because what he built, his house is for family purpose, just for residential. While Mr. D, that invested his whole savings into government treasury bill, realized 22.6 million naira. Then the salary savings again for 10 years post construction is 36 million naira each for each of the employee. Upon retirement, the value of the property built by each of the employee are: one, for Mr. A, the property was valued at 33 million naira upon retirement. That is after 20 years in service, while Mr. B house was valued at 21 million naira and Mr. C was valued at 45 million naira, while Mr. D still has his 36 million naira. That's the principal. So upon retirement, at the end of the 20 years upon retirement, the net worth of each of the employee are: for Mr. A 114 million, Mr. B 84.5 million, Mr. C 90 million naira, and Mr. D 94.6 million naira. So from the analysis above, we can deduce that situation and purpose of investment determines the amount of return an investor is likely to get for his or her investment. If we look at the net worth of each of the employee at the end of the 20 years in service, we can say that they all made good investment decisions. But what differ is the worth or the total amount gotten from their investment. While Mr. A, because Mr. A invested is their net worth. At times, risk appetite of investor determines the likely return an investor is expected to have. As the saying goes, does that the higher the risk, the higher the returns, and vice versa. Let's look at Mr. D. Mr. D decides to minimize his risk by investing in the government bills and still he was able to get more returns than Mr. B. So this is the summary of the analysis uh, in our previous slide. So we can deduce that building for commercial purpose in commercial viable areas will give an investor more returns than building in non-commercial viable areas, because it is the same building cost to build in both highbrow and non-commercial viable areas. However, the only difference is the cost of land, as in the case of Mr. A, Mr. B, and Mr. C. Thus, the purpose of Mr. A and Mr. B for building house is for investment purpose, while Mr. C house is just an asset for him, as he's not getting any return from the building. Then, investing in treasury bills compounded annually is also a good investment for financial growth. This shows that the power of compounding as this shows the power of compounding as one of the important factors for financial freedom and financial growth for long-term purpose. Thus, T-bills of 10 years at 5% gives more returns than building a house for commercial purpose in a non-commercial viable area, as in the case of Mr. D and Mr. B. So finally, we can say that all the employees made good decisions as to their investment, which are relative to the situation and purpose of their investment. So this brings us to the end of the discussion or the end of the analysis. Thank you so much for your time. Then please do not forget to hit the subscribe button, as we promise to give simple solutions to difficult topics. Also share with fellow students, colleagues, family, and friends. So in case you have anything you want to discuss with us, or in any areas we can provide solution, you can kindly contact us via our WhatsApp or via our Instagram page. You can also send a mail to us at bradlocksolutions@gmail.com. Thank you for your time.